Hey guys, what's up? It's Barry with Legacy Money, and it's a big week in financial news. There's a lot going on, so I just wanted to make this quick video to make sure that you're caught up. And as you can tell, I'm traveling, but I wanted to get this done because it's important, and just in case you miss something. These stories may not seem related to you or money, but they are. And I'm going to touch on just a few of these stories, and you can be the judge. This is serious information. It involves your freedom, your ability, your freedom to speech, your freedom to congregate, and the freedom of Congress to borrow money for your good, of course. Okay, let's take a look at the news. So today, testifying before Congress, Amazon CEO Jeff Bezos, Apple's Tim Cook, Facebook's Mark Zuckerberg, and Google parent Alphabet CEO Sundar Pichai will be met with a barrage of questions, I'm sure, from the 13 members of the Subcommittee on Antitrust, Commercial, and Administrative Law, ranging from their market power to the links they go to hold onto that power. That's from Yahoo Finance. Of course, I don't think they'll be too tough on these guys, but they are definitely in the news lately with censorship of the news, the real news, and we'll just have to see what happens. Moving on along, Moderna, Pfizer start decisive COVID-19 vaccine trials, and they eye the year-end launches, according to Reuters. These trials, both announced on Monday, are the first late-stage studies supported by the Trump administration's effort to speed development of measures against the novel coronavirus, adding to hope that an effective vaccine will help end the pandemic. Of course, stocks rose for Moderna, Pfizer, and BioNTech with this news. So, politics, money, stocks. More news. Dr. Fauci isn't particularly concerned about the safety of Moderna coronavirus vaccine, according to CNBC. And according to the FDA, they caution against the use of hydroxychloroquine or chloroquine for COVID-19 outside of the hospital setting or in a clinical trial due to risk of heart rhythm problems. So again, it's okay for Bill Gates, who's not a doctor, to talk about the vaccine and recommend that you get it, but it's not okay for real doctors, like Dr. Harvey Risch, MD, PhD, who has spoken of the effective treating of COVID with simple hydroxychloroquine. It's been around for many years, I think 40 plus years, so it's not okay to speak about that. You may be aware of many of the doctors who spoke this week for hydroxychloroquine were lambasted, their videos were taken down, and just another form of censorship, again, by big media. In the Washington Post, John Roberts strikes again. Conservatives should be furious. Well, again, coming from the Washington Post, but Supreme Court Chief Justice John G. Roberts Jr. has struck again. His decision on Friday decided the court's 4 liberal justices in denying a petition in an important religious liberty case has further inflamed social conservatives already angry with his votes this term on abortion and LGBTQ rights. So John Roberts also ruled against church rights after he's ruled that he also ruled against church rights after he's ruled against casino rights. So it's okay to go to the casinos, but it's not okay to go to churches. So this is an infringement on our natural right to congregate and worship as we choose. So liberals like to cite the statute signed in 1786 on the separation of church and state. So again, this is a violation of our rights as Christians to congregate. Okay, this bit of news is for you real estate investors out there. So if you own rental property, this may be affecting you. According to Fox 10, landlords feeling financial impact on COVID-19 pandemic as renters are unable to pay rent. Now, depending on where you live, depending on if you've got rental property, obviously if the renter, the person leasing the property, is unable to pay rent and they have basically a right to do that according to the HEALS and the CARES Act, well, you're not going to receive that rent. According to CNET, according to CNET, when will the federal eviction moratorium return? August rent relief, laws, more. So the Senate announced it wants to extend the federal eviction ban enacted in March. And here's, this article goes on to tell you what covers the property where you live. The eviction moratorium established by the Federal CARES Act ran out last week, removing protections that have helped 23 million or so U.S. families. Well, how about the landlords? How about the people who have to pay the mortgage? The banks may not be as friendly on this. As a matter of fact, they're not, I know for a fact. And so it goes on to say on Monday, July the 27th, Senate Majority Leader Mitch McConnell announced that the HEALS Act stimulus bill will extend several key provisions of the KEY Act, amongst them the right to forbear or not pay rent. Moving on along to the Fed meeting. The Federal Reserve will meet today. It's Thursday, the 29th. And this headline from the Washington Post: with stimulus influx and infections on the rise, focuses on Powell to outline the fate of the economy. At its meeting this week, the Federal Reserve is expected to hold interest rates steady, shifting attention to Powell's news conference on Wednesday. That's today. I said Thursday. I'm sorry. So Wednesday, today, the Fed is meeting. So that's Jerome Powell, featured in the Washington Post, wearing his COVID mask. Here's another headline from Bloomberg. Fed meeting this week won't answer key economic questions. This week's policy meeting of the Federal Reserve should end up being a no-drama movement, non-event, for markets. That's doubtless what Fed Chairman Jerome Powell and his colleagues on the Federal Open Market Committee desire. And also you see pictured a stimulus check. So will the Fed continue stimulus? I think so. And they have tools in their toolbox, as I mentioned. And I just want to go back to a chart here from the Federal Reserve. Now, this was from 2007 to 2020. Before that, this line was pretty flat, right? But this has been the increase in the money supply, 2008, 2009. And then since then we had a small downturn. They were actually selling assets for a while. But here we go. They are printing money again. So what's that going to do? What effect will that have on your future, your family's future, your retirement? Let's get into that. And to round out the news from the Wall Street Journal, Congress seeks to fix $120 billion tax snafu in PPP loans. Lawmakers want to allow deductions tied to small business loans despite IRS decision. So COVID is having an impact. The IRS, the SBA call waiting list, from what I understand from the CPAs, accountants I work with, 200 plus tiers. Their call centers are overrun. People are waiting in the queue, even people that normally would have access to the IRS. Bank of America is urging lawmakers to correct Paycheck Protection Program. Similar headline to the one I just read. But here's the rub. The SBA loans must be used for operational expenses only, basically to pay employees. And so this is where kind of the problem is coming in there. Businesses using it for other reasons, expansion, research, development, and other things. So the IRS is going to be tightening the belt on these decisions, and of course Congress and the banks are in on the action too. So what does all this mean to you? Well, more stimulus money means more taxes. And let's not forget about the riots. Where's the money going to come from to pay for the damages to businesses and property? Where will the money come from for all of this stimulus? I know the Fed will create it, but who's going to pay the Fed? Where does that money come from? I'll remind you, in 1913, the Federal Reserve was created. Ironically, the IRS was created that same year. On February 25th, 1913, the IRS was allowed to levy and collect personal income taxes. Later on, the 16th Amendment officially became part of the Constitution, granting Congress constitutional authority to levy taxes on corporate and individual income. So, more stimulus, more taxes. By now, you should realize that the Internal Revenue Service and the Federal Reserve control the money supply. And hopefully you realize that politics and the news matter. So you're aware of what's going on. Now, I'm not saying we can trust all the news sources, but you can do your own research and make your own decisions. So news and politics matter, especially in today's climate where market volatility is a factor that many don't consider. My aim is to help you get ahead of the curve and ensure that you are well protected and prepared for what's coming. So here's a few questions for you. Are you comfortable having lawmakers in control of your financial future, your health care, your retirement, your 401k, your IRA, yourself, your 403b, and yes, even your Roth? Do you know the value of your retirement plan, what it will be on the day you retire when you go to take distributions? Do you know what your tax liability will be when you retire? Here's a sad fact. According to the Federal Reserve, Americans have the majority of their retirement savings at risk in the markets, in the Wall Street casinos. The stock markets are volatile and unpredictable, like we've been experiencing, and this is bad for your wealth and your health. In fact, studies show that stock market declines are linked to anxiety, depression, early death, illness, and even fatal car accidents. Life is stressful enough already. Do you really need the added stress of worrying about losing the money that you've worked your entire life for? Recent studies show that a healthy 65-year-old couple could face as much as $500,000 in healthcare costs not covered by Medicare and Medicaid during retirement. Unfortunately, that figure is more than 3 times what the average typical American couple has saved for retirement. So how's all this going to affect you? How are you going to pay for this health care during retirement? The sequence of returns are an issue as well, especially during retirement. So if you draw down a fund in a declining market, you could run out of money. The Monte Carlo simulations, the analysis, show the probability of success at a single moment in time. And so if the losses happen just before retirement, 5 years before, 5 years after, they could be catastrophic for your retirement. The strategies I advocate put you in control. They offer liquidity and use of your money even while it's growing and and while you're working. And they're designed to be tax advantaged, tax-free in many cases when you retire, saving you and your family hundreds of thousands of dollars. So in closing, I encourage you to take the time to prepare. Check out my video on market volatility and how to protect your family and assets. We keep hearing about the new normal. Well, it's here. The time is now. So thank you for joining me today. Please subscribe to Legacy Money and leave your questions and comments in the comments section below. I'll see you in the next video.